On today's Hot Sheet, I'm discussing the Fannie Mae Price Index report that just came out, Realtor.com's latest rental report, mortgage application data for the week, as well as weekly unemployment. Today is Thursday, October 17th, 2024. I am Byron Lazine, and the Hot Sheet starts now. Welcome in to this Hot Sheet, very special Hot Sheet. I am at location here, circa Las Vegas. Let me know in the live chat where you are tuning in from. If you're coming to BAM Mania VIP kickoff day today, that means you are insane like me here doing this show at 6:30 a.m. Or maybe you're on the treadmill. I was there earlier, saw Tommy Toole getting in a little bit late. He got in at 5:30, Bobby, so a little late for my liking on the Tommy Toole gym arrival. But good morning, West Coasters. I admire your commitment to this show, all the West Coasters that do tune in live, and all the West Coasters, obviously, that catch the replay. Replay is always available here on YouTube. Hit the thumbs up and share this one if you're getting value from it. Replays also is available on all of the audio locations as well. But super curious where you're tuning in from. If you're not coming to Vegas either today for VIP or tomorrow for the main event, BAM Mania, what are you doing? Do you have FOMO? Let us know. If you are like in driving distance and you have maybe that much FOMO, you could email Jill at nowbam.com and see if she could get you in for tomorrow's main event. Today, obviously, the VIP kickoff day is totally full. Got this little backdrop behind me. Got a lot happening, so we're excited. We're going to get through all of that. But, I look at the schedule today, and I'm like, there's just so much to talk about here. Thank you, Vanessa, for loading up the topics on the Hot Sheet. And let's get right into the headline news on the Fannie Mae report. Home prices, they grew 5.9% year over year in the third quarter. Now, that growth comes with deceleration from the peak, which quarter one showed us at 6.7% year over year. This is not unsimilar to having deceleration. Once interest rates started to pick up, we still saw home price growth when those home prices were decelerating to quarter one of 2022, when we knew the rate increase was imminent, when we knew it was happening. That home price acceleration started to decelerate. The appreciation started to decelerate. That happened all the way for an entire year, quarter two of 2023, where we saw the lowest appreciation, according to Fannie Mae, at 2.2% when you look at a year over year basis. And then we started just getting back into record price category with more rapid appreciation. Now, as we would expect this time of year, that home price appreciation is decelerating a little bit. We have comments from Mark Palum, the Fannie Mae senior vice president and chief economist. Despite decelerating slightly, home price growth remained robust in the third quarter, as the supply of homes for sale, particularly on the existing side, remained weak relative to historic levels. Existing home sales are not only weak, they are just basically, when you account for population, the lowest we've ever seen or imagined. Being lower than 4 million seasonally adjusted is unlike any prediction because 4 million is basically the floor. It's interesting. I was in an Uber last night here in beautiful Las Vegas, and we were actually stuck in traffic, unfortunately. So it was a bad move to leave Circa. Okay. A little accident, stuck in traffic. I'm in the front. I'm chatting with the Uber driver. And, of course, real estate comes up, as it always does. Isn't this a beautiful profession, no matter what part of real estate you're in? When you tell people you're in real estate from, one part of the industry or another, there's automatic interest and intrigue. And we start talking about the market. And when you let somebody know, when you walk somebody through that this market is struggling unlike anything we've seen since 1995. And he's like, really? He's like, I was in mortgages in 2008. That seemed like the worst, market you could have. Well, activity levels are even lower than we experienced then, right? And we're actually gonna get into that demand here in just a little bit with the mortgage application update. But yeah, this is the hardest market for people working it since 1995. Prices are at all-time highs. So if you already own the real estate, good. If you're already invested in real estate, good, right? All those things. If you're on the side of a transaction, yeah, that number is going to be higher because of how much home prices are. But there's no question about it. This market is extremely difficult, and it's because of this lack of activity on existing home sales that continues to be locked up. Even though mortgage rates fell in the third quarter, we saw some improvements to the months of supply for home sale. Okay, home purchase activity barely budged with that improvement, at least on a national basis, which we saw evidence on the market remained significantly constrained, the lock-in effect, which is what I just alluded to. Now, the improvement on the months of supply means months of supply continues to inch upward. I think on Tuesday we did a little bit covering that from a Redfin perspective, but NAR has it up over 4 on that number. Going deeper into this, and by the way, BAMX members, you've got a lot going on. I keep hearing from so many of you with the new 𝐿 announcement. 𝐿 is going to be here. They should be on the thing back there. 𝐿. 𝐿 will be here with us, but I'm hearing that there are already so many BAMX members using their now free 𝐿 platform, which can be branded to you, to start really generating not only more listings, but more opportunities for their clients. There's already deals in the pipeline with BAMX members, and we're not even a full week in, but there's so much going on, obviously, for BAMX members and the BAMX members that are going to be here in particular. But BAMX members, remember, you have access to the hot sheet show notes. Even when we have the biggest event in BAM's history, like we do today, look at the team has put together incredible hot sheet show notes inside of your BAMX platform. So you can download these, use these data, copy and paste in any communications that you need. So going deeper on the Fannie Mae report here, we covered the top line numbers, the 5.9% year over year. The previous quarter comparison is a deceleration from the 6.4% time of year. Expect that. I expect that to continue, right? And so when buyers are looking at, what do you mean, winter, I can get a lower price. The home prices are still going up, but the deceleration, the rate of which they're going up is happening now. And as that inventory goes up right now, or as inventory is up at the highest we've seen in a couple years anyways, not predicting it's going to go up in the winter, just saying, hey, as it's up where it is right now, months of supply are up at the highest point we've seen in a few years, there's a stronger ability to negotiate at this moment than there has been throughout your previous search, right? It's important for buyers to understand that. Okay. And so that's really kind of the gist of that there on the Fannie Mae. Looking through there, you've got the chart here. If you want to make that something into your marketing, that'll be inside of BAMX. The year over year percent still up, decelerating. How low will this deceleration go over the winter? Could you see it as low as that 2 level? There are projections that say that could happen by quarter 2 of next year, almost getting flat. The only time really in history, frankly, that we got, over zero for under zero there for at any point was obviously the 2007, 2008 crash there. Okay. There's your Fannie Mae report on that. Let's go over to Realtor.com. Realtor.com also happening to be behind me. They'll be here over the next couple of days. Shout out to them and their team. They've put out a rental report. Now they've put it out for the public. I'm hoping, Danielle Hale, you've also sent it to Jerome Powell. This is a good update for him. Median asking rents continue now to decline. So September marks the 14th month of year-over-year rent decline in a row for 0 to 2 bedroom. It's a significant place from where we came. Remember, Jerome Powell has acknowledged that over the last 30 to 60 days. We've covered that. Hey, he's starting to say we're seeing it out there, but it continues to also kind of hedge that by saying it takes a while to show up in inflation. Well, for the first time in CPI, we kind of started to see that show up. If we see more of that, that's going to be further the case that we are getting back to the Fed's 2% target on inflation. How quickly will we get there? and how much data comes between now and 24 days from now when the Fed meets again is going to ultimately decide on how their next move is going to be. As we get closer to 2%, throughout the last couple of years, Jerome Powell said we are going to cut before we get to 2%, but they're also going to be cautious, right? We're going to talk a little bit about jobs later on and what's going on with that this week, as well as the economy overall. There's a report that just came out today on that all of this is kind of getting put into one ball to make these decisions from the Fed. Median asking rent in the 50 largest metros came in at $1,743, down $10 from last month and $17 lower than August 2022 peak. Now, I get it. These numbers that we're looking at right here on rent are still extremely high because of how much they've gone up. But this deceleration is showing that there's not a continuous inflation attached to these rent numbers. Here's the 1% below the 2022 peak after this decline. So still, we're kind of holding peak, even though we've declined for 14 straight months, up over 1,700. If you look at obviously 2021, that same number on median asking rent was about 1,450. So obviously $300 more than at that time. But we are starting to see that cool off as we see more inventory in the rental market, as well as the economy push back. All units, every size, being studio, 1 bedroom, 2 bedroom, all saw rent declines in the month of September. In fact, all year-over-year median rent is in the negative, so below 0%. So that continues to be the case there. Here are the numbers on national rent unit by size. You have, again, the overalls coming in at 1,750, studios at 1,442. That's a 12.7% change upward over the last 5, but down year over year 2.3%. Studios is the biggest downward mover year over year on the percentage basis at 2.3% down. 1 bedroom comes in at 1,600 plus, down 0.5% year over year, up 18% over the last 5 years. 2 bedroom coming in at $1,930 year over year, down 0.4%, up 21.4% on the 2 bedroom in the last 5 years. That is the biggest gain over the last 5 years is the 2 bedroom rental unit. Some of the markets, top 10 markets, fastest rent growth just for September. As we look at those, you'd see Cincinnati at the top of the list at 3.4%, Washington, D.C. at 2.9%, New York, Jersey coming in at 2.8%, St. Louis at 2.6%, San Jose at 2.6% upward. These are the biggest year-over-year changes as we look at September backwards. Louisville, 2.5%, Sacramento, 2.4%, Minneapolis, 1.4%, OKC, 1.9%, and Portland coming in at 1.9%. There's your top 10. Here's your top 10 markets with the fastest rent decline. Okay, so here's where the opportunities are for renters, maybe not good news for investors. Nashville, 4.8% on the decline. Dallas at 4% down. Denver, Austin, 4% and 3.7%. And some of the most expensive rental markets, they go on to say, that would be New York, San Jose, and New York, West, Northeast, and then obviously the West Coast as well. Okay. There you go. There's more data in there in that realtor.com report that you can dig through. The 50 largest metros is also covered in there. Let's get into mortgage applications because this highlights what our current demand is. And mortgage applications with the recent increase have essentially just plummeted here the last week. Now, maybe it's the seasonality catching up. We had that, that spurt upward on activity when we saw low 6%. Now we're, a week of full data coming into this report being up over 6.5. But MBA, Mortgage Banker Association, reporting that mortgage applications decreased 17% from a week earlier. Let's dig in, though. What does that mean? The refinance decreased 26% from the previous week. Okay, that's to be expected. refinances had popped for a little bit when we got into those low sixes. Anybody in the eights, high sevens became more interested in a refinance. So how much is this refinance driving? Although it's 111% higher than the same week just a year ago, how much is the refinance driving this overall 17% number? Well, the number that we care about is still very weak. The seasonally adjusted purchase index decreased 7% from 1 week earlier. So significant drop down on that half a point, give or take, increase on the 30-year fixed. The 7% compared with the previous week was, though, 7% higher than the same week a year ago. And there is your silver lining in this data that you can point to. There's still stronger activity at this time right now on mortgages than there was 1 year ago. We've seen that now for 4 consistent weeks. And if we keep seeing that week over week, we're heading in the right direction. Okay. Mortgage rates, Joel Kahn, the NBA vice president, said that they have gone up for the 3rd consecutive week. And this has put that damper in on applications. We also have the seasonality going on right now. And if we get a drop down in the 30-year before the end of the year, I think we could maybe buck the trend of that seasonality. But truth be told, demand from the mortgage side is the lowest we've seen since 1995. That's just the reality of where we're at. That's what I said to that Uber driver last night. I'm like, hey, people think real estate is pretty easy because prices are high or whatever that are looking on the surface. When you dig in, there's a less interest, demand, activity from a financing perspective anyway, and there has been since 1995. Like, maybe give your lender a hug today, because this is the reality of what they're dealing with, obviously, on the front lines. Frontline workers here in America have their unemployment data coming out. Or all workers, not just frontline workers, but all workers. Data coming out this week. Initial claims was 241,000. That's a decrease from the week earlier, according to the Department of Labor. The decrease comes in at 19,000 from the previous week's revised level. The previous week's level was revised upward from that 258,000 that we covered last week by 2,000 to 260,000. So initial claims on unemployment still, relatively strong, but a couple weeks now, we're seeing that 4-week average now move up. The 4-week average was 236,250. That's an increase of 4,750 from the previous week. When you have two levels that are a little bit elevated there, that's what you're going to get on unemployment. Now, unemployment today came with further news that retail sales also rose 0.4% in September, but that was better than expected, okay? As these jobless claims dipped, again, week over week. When I say they elevated on the 4-week, if you look back the 2 weeks prior to these 2 weeks, we were dealing with lower numbers. Consumer spending, though, just came out this morning, and that held up in September. So that 0.4% increase on the month, which is up from the 0.1% gain in August and better than the 0.3 Dow Jones forecast. You could also say, oh, well, that might push up, some of the Fed's concerns about inflation. But ultimately, what it does show is, hey, unemployment's come down for the week, still higher than what we were seeing maybe a few weeks ago, but it came down, from the week. That comes with this report also states that comes with everything that we saw with Milton. You might have seen unemployment pop when you see, what's going on in the Southeast. As businesses, are obviously impacted throughout that. But you didn't see that. You saw unemployment go down week over week. And now you see retail sales, consumer spending stronger than expected. So again, signs after what we saw in a summer, which was pretty weak in terms of the job reports. Remember, they revised new jobs down 818,000 in July, which is why I still question some of the new job reporting, because when they did a look back on 12 months, they way overstated that. But the numbers in the summer were stacking up to, what's going on here? The job market's getting weaker. We had a higher interest rate, obviously, than we have right now. And the economy was starting to get a little bit shaky in the summer. Now, with the last month and a half, and which is one of the reasons why you're seeing a CME Fed Watch say, hey, they're only going to do a quarter point, if a cut at all, in 21 days when they meet in November. It's because the economy seems to be stronger than what the expectations were in the summer. The economy could be going into the year in a place where they're going to avoid recession, when that was the talk kind of in the summer. And that talk's popped up multiple times, and it's been tabled multiple times. Jerome Powell is laughing every single time. 0% chance, according to CME Group, by the way, that it's a half a point. So dealing with an 87% chance that they still do a cut, and that comes in, that would come in at a quarter point, though. 12% chance, 12.5% chance that there is absolutely no cut at all. On the news today, we did see, we've seen the stocks go up a little bit, and we've also seen the 10-year follow that trend, going up here today to 4.091 on the strong economic news, jobs being, again, better than last week on the unemployment, and then retail sales being better than expected. 30-year fixed yesterday, still hanging around that 6.6 number, 6.63, up from 6.62 on the 30-year fix. And that's where we leave it here for this week, as I wrap this hot sheet, and hopefully get to hang out with a whole bunch of you that are attending BAM Mania. If you're missing BAM Mania, again, if you got extreme FOMO and you're in driving distance, or you're going to fly in this afternoon, email Jill at nowbam.com. Maybe she can make something happen. BAMX members, we've still got the rollout with Zoodealio happening. If you're not a BAMX member, use code ZOO to get 25% off your BAMX membership. And don't worry, maybe there'll probably be a BAM Mania next year, unless we get thrown out of Circa and Vegas bans us for life. That remains to be seen. Can't wait to enjoy session here today with the VIPs. Can't wait to have some opportunities to hang out with everybody tonight at Legacy Club, who is coming, and then all day tomorrow. That's your hot sheet here. I will be back on Monday. I'll still be in Vegas, unfortunately, because I have something going on, or fortunately, however you look at that, next week. But I will be going live with you all next Monday, or this coming Monday, for the hot sheet. Until then, of course, have a great day, and toodaloo.